Some good news for these Turkish shoppers as goods are becoming a little less expensive. Data on the country's inflation has shown that the prices fell to below 52% in August, down from the 61.78% in July. It comes as food prices see their first drop in 4 years. And policymakers have focused on public investment to improve job growth in the nation, which has been on an upward trend in the last 2 decades. And now, authorities have 2 economic targets high on the agenda: lowering inflation even more and increasing exports. This is all part of Turkey's latest medium-term economic program. The government hopes to use the monetary policy as well as fiscal and other reforms to achieve its goals.
In the short term, our main priority is disinflation and price stability. In other words, it means reducing inflation. Of course, without price stability, as just emphasized, we cannot achieve sustained high growth. Therefore, for a permanent increase in economic welfare and sustained high growth, inflation must be reduced to the low single digits.
Inflation in the country has been in a downward trend and is expected to decrease below 42% by the end of this year. The plan is simple: get inflation down to single digits by 2026 and to 7% by the end of 2027. Exports reached a record of $255.8 billion last year. And in July this year, Turkey's export totaled $22.5 billion, a historical high for the month. And the goal is to set the bar even higher. By year-end, exports are expected to increase to $264 billion, and authorities plan to raise this number to nearly $320 billion by 2027. Analysts are expecting major central banks around the world to soon cut rates, with the European Central Bank already reducing rates by 25 basis points back in June. As the cost of borrowing becomes cheaper, so too will its consumers' and investors' willingness to spend. This dovish market will ensure the demand for Turkey's exports will rise well into the future. Selin Tuter, TRT World.